One of the ways accountants analyze business transactions is by using T accounts. And in part one, which I linked above, I discussed the first 6 transactions of Eli's Consulting Services. In part two, which we'll focus on today, we'll analyze 6 additional transactions for Eli's Consulting and continue to practice the concept of analyzing business transactions with T accounts. As a reminder, a T account is a visual representation of individual accounts in a company's general ledger. It's called a T account because it looks like the letter T with the account name on the horizontal line, debits on the left, and credits on the right. Just like a golfer might picture taking a swing before actually doing so, and a tailor pins fabric first before sewing, the accountant uses the T account to simulate what the transaction looks like once it's finalized and posted to the final accounting records. Just remember that every transaction needs at least 2 parts, at least 1 debit and 1 credit, and that's why it's referred to as double entry bookkeeping. As you learn about debits and credits, it's important to follow a systematic approach to identify which accounts increased or decreased and what account to debit or credit. I recommend that you follow this approach where in step 1, you identify what accounts increased or decreased, followed by step 2, where you classify the accounts that you identified in step 1 by account type. And step 3, where you use the dealer mnemonic to find the debits and credits. Let's take a look at transactions 7 to 12 for Eli's Consulting and apply this process to the analysis of business transactions with the use of T accounts. In the 7th transaction for Eli's Consulting Services, the business earned $36,000 in revenue from clients who paid cash for bookkeeping, accounting, and consulting services. When we analyze this transaction using the accounting equation, we said that the business's cash increased because the business now has more cash and fees income also increased. In step 2, we ask what kind of accounts are cash and fees income. Cash is an asset and fees income is revenue. Okay, so assets and revenue are impacted. So now in step 3, we use the dealer mnemonic. Let's find assets first. The graph tells us that assets are on the left side and that assets increase with debits. The business's cash increased, so that means we need to debit cash. What about the second part? Remember that every transaction has at least 2 parts, at least 1 debit and 1 credit. The second part is the increase in revenue. Revenue shown on the right side of the dealer mnemonic, and the graph tells us that revenue accounts increase with credits. So we credit the revenue account fees income. So debit cash and fees, credit fees income. How do we write this transaction using the T accounts? We find the T account for cash and write the transaction ID of G and the amount of $36,000 into the debit column of the cash account because we determined in step 3 that we would debit cash. The amount for the revenue account fees income increased as well. We learned in step 3 that revenue accounts increase with credits on the right side of the T account. We create a T account for fees income and write the transaction ID G and the amount of $36,000 into the credit column of the fees income T account. We completed the analysis of our 7th business transaction with the help of T accounts. Let's practice some more. In the 8th transaction for Eli's Consulting Services, the business earned $11,000 in revenue from various charge account clients. When we analyzed this transaction using the accounting equation, we said that the business's customers now owed more money to the business. We call that an accounts receivable because these are accounts that the business will receive money from in the near future. In addition, Eli's Consulting now has more revenue for fees income. In step 2, we ask what kind of accounts are accounts receivable and fees income. Accounts receivable is an asset and fees income is revenue. Okay, so assets and revenue are impacted. So now in step 3, let's use the dealer mnemonic. We'll find assets first. The graph tells us that assets are on the left side and that assets increase with debits. The business's accounts receivable increase, so that means we need to debit accounts receivable. What about the second part? The second part is the increase in revenue. Revenue is shown on the right side of the dealer mnemonic, and the graph tells us that revenue accounts increase with credits. So we credit the revenue account fees income. So debit cash and credit fees income. How do we write this transaction using T accounts? We create a new T account for accounts receivable with debits on the left and credits on the right, and write the transaction ID of H and the amount of $11,000 into the debit column of the cash account, because we determined in step 3 that we would debit accounts receivable. The amount for the revenue account fees income increased as well. We learned in step 3 that revenue accounts increase with credits on the right side of the T account. We find the T account for fees income and write the transaction ID H and the amount of $11,000 into the credit column of the fees income T account. Let's move on to transaction number 9. In the 9th transaction, Eli's Consulting Services received $6,000 on account from clients who owed money for services previously billed. We previously analyzed this transaction using the accounting equation and said that the business's cash increased because the business now has more cash. In addition, the customers that previously owed money to Eli's Consulting now owe less money, meaning accounts receivable decreased. In step 2, we ask what kind of accounts are cash and accounts receivable. Cash is an asset, and so is accounts receivable, because money is owed by a customer as a form of property. So only assets are impacted by this transaction. Now in step 3, let's use the dealer mnemonic. We'll find assets. The graph tells us that assets are on the left side and that assets increase with debits. The business's cash increased, so that means we need to debit cash. What about the second part? Remember that every transaction has 2 parts and at least 1 debit and 1 credit. The second part is the decrease in accounts receivable. Accounts receivable are also an asset. Assets are shown on the left side of the dealer mnemonic, and the graph tells us that assets increase with debits and decrease with credits. The accounts receivable decrease, so we need to credit accounts receivable. So debit cash and credit accounts receivable. We'll now write this transaction using T accounts. We find the T account for accounts received cash and write the transaction ID of I and the amount of $6,000 into the debit column of the cash account, because we determined in step 3 that we would debit cash. The amount for the accounts receivable account decreased. We learned in step 3 that asset accounts decrease with credits on the right side of the T account. We find the T account for accounts receivable and write the transaction ID I and the amount of $6,000 into the credit column of the accounts receivable T account. Let's move on to transaction number 10. In the 10th transaction, Eli's Consulting Services paid $8,000 in salaries for the accounting clerk and Sergio Sanchez. We previously analyzed this transaction using the accounting equation and said that the business now has more salaries expenses and cash decreased because the business paid the accounting clerk and Sergio. In step 2, we ask what kind of accounts are salaries, expenses, and cash. Salaries, expenses are expenses, and cash is an asset. So expenses and assets are impacted by this transaction. So now in step 3, let's use the dealer mnemonic. We'll find expenses, and the graph tells us that expenses are on the left side and that expenses increase with debits. The business expenses increase, so that means we need to debit salaries expenses. What about the second part? The second part is the decrease in asset and cash. Cash is an asset. Assets are shown on the left side of the dealer mnemonic, and the graph tells us that assets increase with debits and decrease with credits. The cash account decreased, so we need to credit cash. So debit salaries, expenses, and credit cash. We'll now write this transaction using T accounts. We'll set up a new account for salaries, expenses, and write the transaction ID of J and the amount of $8,000 into the debit column of the salaries expense account, because we determined in step 3 that we would debit salaries expenses. The amount for the cash account decrease in cash is an asset. We learned in step 3 that asset accounts decrease with credits on the right side of the T account. We find the T account for cash and write the transaction ID of J and the amount of $8,000 into the credit column of the cash T account. Let's move on to transaction number 11. In the 11th transaction, Eli's Consulting Services issued a check for $650 to pay the utility expenses. We previously analyzed this transaction using the accounting equation and said that the business now has more utility expenses and cash decreased because the business paid the utility costs. In step 2, we ask what kind of accounts are utility expenses and cash. Utility expenses are expenses and cash is an asset. So expenses and assets are impacted by this transaction. So now in step 3, let's use the dealer mnemonic. We'll find expenses. The graph tells us that expenses are on the left side and that expenses increase with debits. The business's expenses increase, so that means we need to debit utility expenses. What about the second part? Remember that every transaction has 2 parts and at least 1 debit and 1 credit. The second part is the decrease in cash. Cash is an asset. Assets are shown on the left side of the dealer mnemonic, and the graph tells us that assets increase with debits and decrease with credits. The cash account decreased, so we need to credit cash. So debit utility expenses and credit cash. We'll now write this transaction using T accounts. We'll set up a new T account for utility expenses and write the transaction ID of K and the amount of $650 into the debit column of the utility expenses account, because we determined in step 3 that we would debit utility expenses. The amount for the cash account decreased, and cash is an asset. We learned in step 3 that asset accounts decrease with credits on the right side of the T account. We find the T account for cash and write the transaction ID K and the amount of $650 into the credit column of the cash T account. The last transaction, number 12, is up next. In the 12th transaction, Trade and Eli withdrew $5,000 in cash for personal expenses. Withdrawals are funds taken from the business by the owner for personal use. These payments are not associated with the business, but rather a return of the investment that Trade and Eli made into the business. When we previously analyzed this transaction using the accounting equation, we said that these type of payments are a return of capital. So the owner's capital decreased and cash decreased because the business now has less cash. In step 2, we ask what kind of accounts are capital and cash. The owner's capital is part of the equity accounts and cash is an asset. So equity and assets are impacted by this transaction. So now in step 3, let's use the dealer mnemonic. We'll find equity accounts in the graph, and it tells us that equity accounts are on the right side and that equity accounts increase with credits and decrease with debits. The owner's capital decreased, and therefore we have to decrease the capital with a debit in a special account called drawings. What about the second part? The second part is the decrease in cash. Cash is an asset. Assets are shown on the left side of the dealer mnemonic, and the graph tells us that assets increase with debits and decrease with credits. The cash account decreased, so we need to credit cash. So debit drawing expenses, debit drawing, and credit cash. We'll now write this transaction using T accounts. We'll set up a new account for Trade and Eli's drawing and write the transaction ID of L and the amount of $5,000 into the debit column of the drawing account, because we determined in step 3 that we would debit the drawing account. The amount for the cash account decreased, and cash is an asset. We learned in step 3 that asset accounts decrease with credits on the right side of the T account. We find the T account for cash and write the transaction ID L and the amount of $5,000 into the credit column of the cash T account. Now that we entered the last transaction into the T accounts, we can sort the T accounts into assets, liabilities, and owner's equity categories. The next step is to calculate the total for each column of the T accounts and calculate the balance. Calculating the total for each column is called footing. For the cash account, we have total debits of $125,000 and total credits of $13,650 and a final debit balance of $111,350 after we subtract the credits from the debits. If there is only one debit or one credit, like in the accounts receivable account, you don't need to foot the columns, but rather just calculate the balance. Let's now talk about the trial balance and why accountants use it to verify the accuracy and completeness of the accounting entries. The trial balance provides a listing of our T accounts and balances, and you can verify that total debits still equal total credits. In practice, you would run a report that is called trial balance in your accounting software program. If the total debits do not equal total credits, which may happen in manual accounting, which is what we're doing here, we need to go back and fix our entries. In an accounting system, the total debits always equal the total credits in the trial balance because that is checked automatically. You wouldn't actually be able to record a transaction that doesn't balance. But as we're practicing accounting, it will happen to you all quite frequently because you'll forget to record one side of the entry or transpose a number. So here are a few tips for finding what transactions you might have recorded incorrectly. If the difference between debits and credits can be divided by 9, there is a transposition error. Like, for instance, you wrote 45 instead of 54, or you entered 3,500 on the debit side and 5,300 on the credit side. The difference between 5,300 and 3,500 is 1,800, which is divisible by 9, and that would therefore be a transposition error. A slide occurs when the decimal point is misplaced. So you've entered one side as $375 and the other one is $37.50. Those are the two typical errors that you might find. Other errors would be, for instance, you recorded a debit, but you forgot to record the credit, That's typical as well. That is why after the trial balance has been prepared, we double check that the total debits equal the total credits. And we're now ready to prepare the financial statements. So don't forget that important step. Double check that your debits equal your credits. So what do we prepare first? It's always the income statement that comes first. Why? You need the net income from the income statement to complete the owner's equity, right? You can't prepare the statement of owner's equity if you don't have the net income. And you can't complete the balance sheet without knowing the ending balance for the owner's equity. So it's important that you have that. So let's start with the income statement. We go back to our trial balance. We enter the fees income of $47,000 from our trial balance. We enter the expenses for salaries expenses of $8,000 and utility expenses of $650, and then subtract the total expenses of $8,650 from the revenue of $47,000 and calculate the net income of $38,350. Okay, we next prepare our statement of owner's equity, which requires us to start with a beginning balance of the capital. As of December 1st, we have $100,000. We add that to our net income of $38,350 from the income statement. We subtract what Drayton Eli already took out as drawings of $5,000, and then combine net income less the withdrawals, and then add that amount to the beginning balance, coming up with an ending capital balance of $133,350. We're now ready to prepare the balance sheet. We first list out all of our assets: cash, $111,350, accounts receivable, $5,000, supplies, $1,500, prepaid rent, $8,000, and equipment, $11,000, for a total of $136,850. And we list our liabilities on the right side, starting with accounts payable, $3,500. We then list owner's equity, which we transferred from the statement of owner's equity of $133,350 for a total of $136,850. And we again see that our accounting equation of assets equals liabilities plus owner's equity still holds true. $136,850 on one side and $136,850 on the other side. I hope this was helpful. Keep practicing, and before long, you'll feel confident in analyzing business transactions with the help of T accounts.